Last week on the Investors Corner, you joined us with Milesh Lakhani, who's a property investor, HMO investor. Now, this is part 2 this week, where we'll be discussing more property strategy, more of his journey into property, and how he makes investment decisions. So don't miss out. Make sure you're listening to this one, and make sure that you subscribe to the Investors Corner if you like what you hear. Talking about property investing then and your experience in it, there's a lot of different people saying different things out there on what type of investments to go in, whether that be short-let investing, HMO investing, stick with the normal buy-to-let investing, social housing. So I think that's goes back to, people not knowing where to start, because you've got a lot of people out there saying different things. In your experience, obviously you're in HMOs. Would you stick with the HMOs, or would you venture into something different if you could go back, or just stick with how you've done it?
What does that fun pot of cash look like, I guess, is Andy's asking you.
So let me go to Andy's thing first. For me at the time, HMOs was the best way for me to earn that income regularly. Would I do SA instead at that point in time? Probably not, because for me that's a different model.
Yeah.
It's not as consistent as HMOs. I think it goes back to, and sorry to keep banging on about it, it goes back to what you want. What is the plan? What is it you're looking for from it? How much time have you got? How much money have you got? And in what time period? So if it was, I want to replace my income of $3,000 a month, then, that's great. How long have you got to do that? How much time have you got? Then you can say, okay, is HMO the right option? Let's do some analysis on that. Let's look at buy-to-let. So I always say, start with buy-to-let. How many buy-to-lets at £200 a month are you going to need to get what you want?
Yeah.
Similarly, do the same with HMOs, because the cash flow is different. How many of them? Then look at SA. Then look at supported living, social housing. Rent to is another thing, right? Rent to HMO, rent to SA, all that stuff. So there's plenty of options out there, but it's got to be lined up with what you want. And start with the buy-to-let when you're doing your analysis and your due diligence, because that is the basic kind of entry-level property type that you can get into.
That's it, isn't it? Is that your buy-to-let is a lot easier to manage. So if you are a first-time investor, then that is definitely the route. I mean, going straight into HMOs is probably not the right thing to do unless you're going JV with someone who's potentially got a bit of experience doing that, or you understand the HMO model. Because there's a lot more stuff that goes into HMOs, right? A lot more maintenance, a lot more responsibilities, a lot more planning, all of that sort of stuff. So you've got to make sure that you get that right.
The only thing on that I would say, just to be slightly objective, is a lot of people, when they're doing that first move into property investing, they've only got one pot of cash, and it's quite easy to lose that in a buy-to-let. And then if the market's not flying, or you haven't done some sort of refurb and refinance, it can be locked away and not lost because it's there, but you may not be able to go again because you've put all of your eggs in one basket. That's the only thing that I think I've seen a lot of investors that have gone, right, I really want to get into property investment, make it a side hustle into a career and full time. And then they make that move and they kind of go for something, but the cash is now locked away and it's difficult to kind of raise the finance. I think that's the big thing that is a challenge for a lot of people.
Yeah. So there are various ways, traditional finance routes that you can go down in your bridging lending and that type of stuff. I always say you've got to buy right. So if you want to craft a career out of it and that is your long-term plan, you need to find a way of recycling that money as quickly as you possibly can, alongside having various routes of finance. So private lending is quite popular as long as you know how to do it right and you're within the rules. Traditional finance as we know it, buy-to-let lending, mortgage lenders and bridging development finance, all that sort of stuff. But yeah, it can be, but again, it depends how you buy, because typically the buy, refurbish, refinance, rent, whatever.
How many R's there?
Exactly, and all the R's that go with it. That is a good model because you're in some way, shape or form adding value to that property. So if you buy it in the right way, you add the value, then you can go and do your refinance or sale to allow you to move on to the next one. And that's what sets us apart. And not many people say this around property. It's hard. It is hard. Knocking out 10, 15 viewings on a Saturday consistently. I was doing that twice a month for about 7, 8 months. And it took that to get me one deal. And then, naturally, it's like the buses. But just to get to that point, you're having to do that much scrolling on Rightmove on online to find those properties. Then you got to arrange the book viewings. Then you got to go and do the viewings. Then you got to do your numbers. Then you've got to put an offer together, and then you've got to send it off to the agent or call the agent or whatever. Then you've got to follow it up. So if you just work out the amount of time it takes for one viewing or one property, it's a lot.
Yeah.
And if you're looking to add value, you're competing against people who want to move in there. And so then it becomes a numbers game. So at any point, you need to have, I'd say, best part of 20 plus offers out at any one time for one to come good. So then you wind that back and think, wow, this is quite time intense. And then it's back to why you're doing it. How hungry are you to achieve what you want to achieve? Because nothing's easy.
A lot of people don't think about the actual effort that goes into to get a property. I suppose that's where you need a good team around you, good agent, good people that could bring those properties to you.
Absolutely.
And so you get a stab at it first.
And like I said, the team's really, really important. Having a decent broker, having decent relationships with agents, where you are building that relationship, building that rapport, so that they take you seriously. I'm sure you guys can tell me how many times you have people come in with a business card saying, "Oh, I'm a professional property investor. This is what I'm looking for." So, from your guys' point of view, like, how do you know who's good for it and not? So
normally the ones that don't do that.
Brilliant.
I
put my business card on.
In terms of like today, and you mentioned kind of advice and a bit of mentorship and consulting, and we spoke off camera about the courses that are available for people to go and buy. And I always laugh when I say, passive income, because there's nothing passive about property in my eyes. It's something. This is a hands-on approach, as you've rightly kind of explained so far. But what are you doing now on that basis? Is that something you've dabbled in, or you're progressing?
Yeah. So what I found at the moment is there's lots of people coming to me for I want to get started. I've got a bit of money. I really want to get into it. Where do I start? And that's fine. So I've got just working on a bit of a package at the moment, whereby it's kind of two approaches. One is a one-off consultation, whereby you bring me an issue or a problem. You might be an experienced landlord who wants to do a review of your portfolio. You might be somebody who wants to get started in it. Various reasons you might have a problem with a specific property. So it's a one-off kind of setup where you'll have an independent view. I'll understand what the issue is. You'll go away with an action plan as to what the next steps are. For you to go and do that. You might have guessed I like the business and the strategy side of things. So the other offering is a annual offering over 4 quarterly sessions. First one is about, right, let's really nail that plan. Let me challenge you on why it is you think you want what you want. Stakes in the ground, action plan for the next 3 months. And then Q2, Q3 is that very much that review. Do we need to tweak stuff? And then Q4 is what's gone well, what's not gone so well. Let's set up a plan for the next period. So that's where I'm finding that there's a bit of a gap at the moment. Like I said earlier, information's out there. But that individual accountability, individual planning, goal setting stuff is, I think, a little bit lacking. I think there's an opportunity there and people need it. I totally agree. I think especially in this day and age, we found it with just estate agency, for example, is we've built an estate agency business which is quite different to the traditional, quite heavy on social media. So there's a lot of content to absorb out there. We're quite open in sharing our advice and our findings, but it's not very often you see people take the advice unless they've had an individual conversation. And very much kind of in the same way that you're experiencing there, to have a WhatsApp or can have a quick call with you or whatever, it gets to the point where that time is being taken away from your goals
So you either need to see some finance for it so that you can realign it with your goals, or you need to say no. And it's kind of, I like the way that you've kind of constructed that package, because you're still helping them, but you're seeing a reward to your goals for that as well.
Absolutely. Nail on the head. Yeah, couldn't agree more. And it is, you know, it is a business, and I always say business first, property second. Mm-hmm. Property is your vehicle within your business. It's the equivalent of a product or a service you're offering. Yeah. You've got to get the business bit done first, because there are lots of people actually who will just start buying properties and properties and properties, and they'll wonder, oh wow, if I'd have just done this before I started out, or if I'd have just put these efficiencies or processes in place, then life would have been a lot better. Yeah.
I mean, I can vouch for that. I've been in property for 21 years. I've bought 17 properties in my lifetime. I'm 40, and if I could go back and do it all again, I would have done it very differently. I'm in a fortunate place that I've got my forever home, which is great. But I think I would have held on to the properties for longer, because I was too impatient to get to the next step on the ladder, rather than letting the equity grow and taking advantage and trying to keep hold of them. I was very much in the refurb and sell, rather than the refurb and finance, because my family, my background had an arm of construction and DIY and stuff like that. So I saw, and because I've been in residential sales my whole life, I've seen the profit of selling rather than the reward of holding. So that would have been the difference that I would have made. I would have more cash in the bank if I'd have done it that way. I might not be in the forever home as early as I was at quite a young age, in my mid-30s, but I'd have probably been in a financially stronger position. And then when I bought the forever home, I potentially would have bought it with less finance.
That's interesting, isn't it? Yeah. So we took the opposite approach almost, because I had a regular income stream from the job that I needed to have to live off, and so income was the priority at the start. But what the route you went down is not uncommon. I see so many people now, even in their mid-50s, 60s, trying to do commercial conversions or developments and stuff, and there's so much pressure on it because they have left their job and they don't have the steady income. And so they're almost like, I'm in a position where I need the lumps of cash to fund my day-to-day. And it'd be great to have done what you've done, where you've got HMOs or you've got an income stream that's already built. So it just takes the pressure off the capital stuff. Yeah, 100%.
There's
no right answer at the end of the day.
There isn't. No. But what you have when you're when you've got a portfolio, you've got properties that you rent out, is when the interest rates and when the changes to tax and things like that evolve, you can evolve in the rent. So you can try and make things. It might mean you get less of a margin, but you're still holding an asset with an income. When those things happen to you in your personal life, taxes, personal income, etc., or as we've seen in the last 24 months, interest rates go from A to B. My interest rate has just gone from 1.52 to 4.24. That I can't do anything about that. I can't start asking the wife to pay rent. It would go down so well.
That definitely wouldn't go down.
No. So, those are the things that is different when you're in control of the asset rather than, as you would say, the liability, if you like. But that's for me personally. I just wanted to ask on location. You mentioned Wales. You nestled in. You found this team around there, and you've got the agent, etc. Is location still a conversation within your forecast, your future?
Definitely, yeah. So the reason we went up north is to buy income, essentially, because you get a much better bang for your buck. Your returns are better. One thing we've not done is leverage ourselves too much. So we refinance once at that 75% once we've added the value, and we stay there. So I'm not looking to gain a capital lump out of it anymore. Just because that's just a little bit risk averse, or want to keep it at that level, because we're quite happy with the income. So capital's not baked into our numbers up north. We're very much now doing last couple of years doing stuff down south, local to where we are, because we're looking for empty properties. We've done a couple of land planning gain type opportunities. The returns are much better for that type of stuff here. Yes, entry level's higher. But the rewards are higher. And because we're looking to sell on or flip or build the pots of cash, that's why we've chosen to move down here. And I'm done with the driving as well, to be honest.
Yeah. You can get to a point where you can start to change parameters and filters.
Yeah, but again, that's down to what our plan was. So it was about income. Now it's about capital, and is for the next 4 or 5 years.
Yeah,
and then we'll review again.
Nice.
Let's talk about the market, because the market's something which, like I say, I started in 2003. But if we just bring it back to lockdown, just in the last 4 years, we've seen some waves, shall we say, in the market. But what's your kind of overall summary and conclusion and take on the market as we sort of hit the last section of 2024?
Well, that's a big question.
Not asking you to predict it, but what your take is on it.
So I think it's harder today than it was probably a year ago. I think it swings and roundabouts in terms of what you're looking to achieve. So, I'm sure you guys have seen as well, with the rates going the way they have, valuers aren't valuing as high as people might have anticipated once they've added that value to the property.
Yeah.
Which is a bit of a kick in the teeth sometimes if you are looking to refinance and move on to the next one.
Mm-hmm.
But on balance, rents are fairly strong.
Yes.
Right? So if you've been downvalued by 20k or 30k, yes, it is doom and gloom short term. However, your loan to value is less. So your actual cash flow is going to be higher because they're lending you less. Your mortgage payment's less. So your return on that rent, ROI-wise, is higher than it would if you've got that higher valuation. So it's frustrating that you haven't got the lump out, but you're going to get that lump out over a period of time now instead of losing it.
Yeah.
So it's not all doom and gloom.
No.
I think, it back to, I know I keep going on about it, it's back to what people are looking for. But I think generally rents are going in, upward trajectory. I think the market's showing signs of improvement as well. The unknown is this October statement that's due from Labour, and that's quite telling. Obviously, we've got renters' rights as well, EPCs. So there are more considerations, and you need to be closer to what's going on in the market today than you would have done 9-12 months ago.
Yeah. What impact do you think this renters' rights bill, renters' reform bill? I mean, I hate talking about it.
You love talking about it.
Hate talking about it. But obviously it's a thing that needs to be discussed, because this is potentially going to have a massive impact to current property investors, landlords that are looking to exit because they no longer feel in control of their investment. And normally once you start thinking you're losing control, then you get out of something. I mean, from things that I've seen, there's some not so bad things, there's some bad things. And people that I've spoken to recently, property investors, landlords, are staying in it for the long term. They don't necessarily care what the outcome is going to be on that, because they've got the right people around them to make it work, and they're in it for the long haul, and they won't need that property back at any point. And if they do, it'll be to sell it. But do you think it's going to have more of a negative impact than a positive impact? Do you think that we'll see the supply of rental properties come down dramatically, which will make tenants suffer more by not being able to get a property? So it's going to have the reverse effect of potentially protecting tenants. Obviously, things are still being discussed. It's got a long way to go before it comes in. But as a property investor, what do you see of it? Do you think it's detrimental to you, or is it just business as normal, carry on?
I think from our point of view as investors, landlords, I think the mismatch for me personally with this is I don't disagree with a lot of the stuff that's being proposed, but the challenge is that we haven't got the infrastructure, and by that I mean the court systems aren't in place to support us. So I'm all for tenants having longer periods guaranteed within the properties, because it's great for us as well, because we know we're getting that income for that period of time as well.
Yeah.
But when things go wrong is when the problems are going to increase, because when things go wrong, going from 2 months in arrears to 3 months in arrears, I do not understand. I just don't get it, because it's just passing the problem on to us for that extra month.
Yeah.
I'd be all right with it if I had confidence that the court system and the eviction process is going to be backing me up.
Yeah.
At the moment, I don't feel that that's quite there. Now, they're making noises about, we're going to put loads more judges into the court systems and everything else, but that's yet to be seen, and details yet to be seen on that. So I'm not overly opposed to it, but we just need the support as landlords, because ultimately, private landlord market is required.
Yeah.
Whether governments like it or not, they need us to bolster up housing.
Yeah.
So let's do it collaboratively. And going off a little bit, EPCs, EPCC for all rentals by 2030, as Ed Miliband, I think, came out yesterday.
Yeah.
They are actually doing a consultation on that this side of the year, I understand, which is actually welcomed, because we're given the opportunity to share our views in that. How realistic is it?
Yeah.
Now, the skeptic or cynic in us is saying, well, next election, 2029, are they going to still be here? And so what's the point?
Yeah.
Are the goalposts going to move again? But yeah, I think we've got to be much more tuned into it all, more than we ever have done, I think, and just be professional about it and look at what it actually individually means for you.
Yeah, I spoke to clients a couple of years ago when they were talking about it, and they were bringing it through Parliament, and they obviously got to the final hurdle and fell through. But before that, there's a lot of clients that I know that sold either their portfolios or their one or two buy-to-lets, obviously falling down at the last hurdle. They wished that they'd stayed in. They'd turn around to me and said, completely jumped the gun on that, because they wanted to keep those properties, but they were scared that this was going to happen, and they made the assumption that it's all negative, it's all against them, they're losing control, when actually, if you had been open about what your plans are and what information do you want to know and how will it affect you, if you'd spoken to the right people, it'd have been, actually I'll keep hold of it.
Yeah, and I think that applies now. So I think, second reading for this renters' rights is early October, I believe.
Yeah.
So then there'll be a bit of backwards and forwards.
Yeah.
Then it will go for royal assent before it's passed.
Yeah.
So actually, realistically, we're probably looking at Q2, Q3 at the very earliest.
Yeah.
So I wouldn't be making any rash decisions right now. Stay close to it. As things start getting a bit more concrete, then and only then do you need to start making these decisions. But right now, who knows?
Yeah.
Yes, we've got some information, which is great, but it's not enough to draw any conclusions from and make any decisions off the back of.
And that's exactly what I say to clients is, when they say what's going to happen, I don't know. This is what they're talking about, but nothing's been set in stone yet. So as far as you're concerned, it's business as normal, continue as normal. And, I'll be your go-to once something gets released, and I inform you about what is going to happen. But right now, just carry on.
Yeah, but I think big changes in markets don't stop markets. They just change and make new markets, and I think that's important. I always get really frustrated when people have a mindset where they look at a hypothetical problem and stress out about something that's not happened. But what if this happens? Well, don't worry about it now, because it hasn't. And it's the same with the market. But if this happens, this will happen. But this hasn't happened. So let's see what opportunity comes from the new market. When we had the stamp duty 3% come in, it created an opportunity. In how we looked at it, it created a different opportunity. When we had the stamp duty holiday come in up to 500k, it created a different opportunity. When it ended, it created a different opportunity. Every time you look at it, we've got the budget on the 30th. As business owners, people are panicking. Absolutely. They're worried. Well, that might mean that when we look at it and we say, as it stands at the moment, there are more 65-year-old people in the UK than 20-year-olds. Maybe that's an opportunity to go and acquire some businesses, because maybe they see that and they go, now it's the exit time. So rather than panicking, just see the opportunity that could unfold. And I think in investing in anything, business, property in this case, that's the way that you've got to outlook things, is wait for the decision, don't be rash like you said, and then look for the opportunity, because there'll be one. There's always one.
It's how you respond.
Yeah. If I was to ask you this question, I know the answer you give me, so I'm going to ask for your second tip for landlords, because the first would be to invest in a way that it aligns with your goals, because we can tell that from the podcast, which is a number one great tip, and we've said it before. But as a second sort of tangible tip for someone that is in property, let's not talk about someone that wants to get into it, and a landlord that's in property and they're looking to change it from a side hustle to a full-time career, what would be your second biggest tip?
I think another thing I'm seeing a lot of is existing landlords not reviewing their existing portfolios, and there's this hunger to grow, which is phenomenal and great. But actually, you might be leaving stuff on the table with what you've already got. And there's lots of reasons why people don't do that, because you're holding a mirror up against yourself because you've made those decisions, right? Yeah. I did a review with somebody earlier this year. He was really aggressively buying, bought 12 properties, I think, within 10 to 12 months, something like that. And he was buying properties at a certain cash flow at that current time. And I said, we need to review your portfolio. Went through it in quite a bit of detail, and turns out that there was 2 deals in there that he had that weren't performing as well. So he decided to sell those, release the equity and the cash from those sales, even put it through auction. So I was happy to take a bit of a hit because it would get him the money out to go and buy properties that were cash flowing in way higher than those ones. So there might be some gold in your existing portfolio, and you're not standing still if you're reviewing your portfolio. You are still growing. You are still moving forward. There's a big hype about, grow, but you've got to maintain your existing. It's a bit like, your business. You've got a lettings side, which is nurturing and working with the existing landlords that you've got, or new landlords that you bring on, whereas sales is a bit more transactional, unless it is investors you're working with. Yeah. So it's just about having that sweet spot and that balance. But yeah, I would say look at your existing portfolio. Where's their value? What's coming up? Is there any other opportunities you've got within it? And that might be throwing some money at it to increase the value by doing some refurb work or whatever. Yeah. Because the rents are strong, so it may be worth doing that.
Yeah, great point.
So do that, then look ahead.
Yeah. Great point, and some great insights as well. And I thank you for your time. Thank you for coming on the podcast. It's been a really good episode. I think people listening will get a lot of value. And I guess if people are listening and they'd like to take you up on some of the consultancy or the kind of the 12-month plan, then I'm sure you'll be okay for us to share the details of yourself with them. Yeah.
Thanks both for having me. Great to chat.
Yeah, thank you very much.
Thank you.